Lesson 4.5, you're on page 118 in your book, and we're talking about the end of the fiscal period work that you need to do. So basically you're adjusting and closing entries for this company, for a departmentalized business, and then a post-closing trial balance, okay? So we're not figuring out any new information here. We are just creating we're putting in the journal the information that we've all calculated and figured out from the worksheet that we just finished. All of our adjusting entries, we write adjusting entries at the top. We list them all down. Most of these these should all be 2 lines. Date each single one. This information all comes from what we just completed, so the worksheet, the adjustments column. And we simply plug in our debits and credits. They should all equal out. After we have finished our adjusting entries, we got them all journalized, then we need to work on the closing entries. Closing entries then are where we need to prepare all of our temporary accounts for the next fiscal period. So we close these accounts out, they go back to 0. That way when we use them in the next fiscal period, they reflect just the information from that period, not a total for the whole year or multiple years that we've been using them. Okay, just to reflect the information for that period. All of these accounts are going to get closed into, remember, our income summary account. That's the account, income summary general, is what we're going to use to close all these things into. It's our temporary account that we use basically just for this purpose. Before, we've created some income summary, some specific ones to help us with our department work, but now we use just the general to go ahead and close all these accounts. Now you notice one thing different on here is that it says continued on general journal page 15. We don't want to split pages when we're doing some of these entries. Some of these entries are going to have a lot of accounts in them. If you flip the page over to 120, when we do closing entries here, we have like 30 accounts that are going to be used. Okay, if we don't have that many lines left, we don't want to split it in the middle, just because it makes it difficult to flip back and forth. You can't see all your credits and debits together. It can get kind of confusing. So you want to make sure you have enough lines for whatever entry that you're doing. So this one looked like we had plenty of room, but they weren't going to have room to do the next closing entry on this page. So they just write continued on journal page 15. We're on 14, just write the next page number. And if you look over, if you flip the page, you can see that then on the next page of the closing entries, it just says continued, and then you list them all out. This way they're all together. You're not splitting pages. Makes it easier to see what's going on here. Alright, as far as closing entries go, we have 4 main closing entries. Okay, and these haven't changed. There's just more accounts that are going to be used now. Okay, so number 1, let's change the first closing entry then is the all income statement accounts with credit balances. Now, anything on our income statement with a credit balance is going to be a revenue, so sales, and it's contra cost accounts. Okay, so if we look here, number 2, on our steps, entry to close income statement accounts with credit balances. So we have all of our sales accounts, and these are our contra accounts, purchases, discounts. Okay, money that we have discounted off. So we'll close all these accounts, and we close them into income summary general. And if we look at our second closing entry for income statement accounts with debit balances. So these are all of our cost accounts, contra revenue accounts, and expense accounts. So that's going to be our income summary for departments, our sales accounts, purchases, anything that has a debit balance, we're going to credit and close. So this is our big one here, okay? So you just go through the income statement, anything with a debit account, or debit balance, then we're going to go ahead and close it into our income summary account. Our third closing entry then is to record net income or net loss in the retained earnings account and to close the income summary account. So kind of a double whammy here. So we close the income summary into retained earnings. What that does is takes any money that we gained or lost, and that puts it into our retained earnings account, which retained earnings is money that the company has held on to for future use in the business. So if we made more income, and we're going to put it in there, sweet. If we lost some money, we're going to take some money out of that account, so we have less money to work with. And then the last closing entry is to close the dividends accounts, okay? Because we want to keep those separate for each fiscal period as well, okay? So we close the dividends account into retained earnings. So these 4 closing entries, which are on page 119, this is going to be a list that you're going to want to remember, okay? Close all the income summary accounts with credit balances. Close all the income statement accounts with credit balances. Close all the income statement accounts with debit balances. Third, you're going to record net income or net loss in the retained earnings account and closing our income summary. And fourth, you're closing the dividends account. Okay? So remember these 4, write them down, put them in your notes, whatever works for you. And then you have these examples that you can look at here in the book. Last but not least, you have a post-closing trial balance on page 122 in your book. Post-closing trial balance, after we've done all of our closing entries, we go through and anything that's left with a balance gets written down in our post-closing trial balance. Okay. Remember, this is for a specific date, not a month-ended type of thing. So it's the end of the fiscal year, fiscal period. On this point, it's a fiscal year, December 31st. Start at the top and go through all of our accounts. Like I said, anything that still has a balance left over gets written down, and debits should equal credits. Everything that all temporary accounts are closed and ready for the next fiscal period. So as long as we didn't make a mistake somewhere, debits should equal our credits.